Home prices in Arizona have already started going down, with home prices already having declined by 6% over the last year across the state, but overvaluation levels still being around 25%. You can see that this level of overvaluation in Arizona's housing market has improved over the last year. However, it's still very, very high and suggests that you need to be careful buying in Arizona heading into 2024, because this is a volatile housing market that had a massive crash in the last downturn, and I think it's going to have another big crash because, put simply, the local population in Arizona, particularly in a metro area like Phoenix, they cannot afford the current home price levels, especially not with mortgage rates now hovering around 7 to 8%. If we go on Reventure app and change the data point to house payment as a percentage of income, you can see in Phoenix, the typical house payment now for a home buyer is almost $35,000 per year. Meanwhile, the median household income is only $86,000 in the Phoenix metro, meaning that the average household has to spend 41% of their income in order to buy a house right now. And obviously that's not sustainable, because what's even more concerning is that this lack of affordability today heading into 2024 is basically the same that we saw in 2006 at the peak of the last bubble, before home prices absolutely crashed and Phoenix became a very affordable place to buy. And ultimately, a leopard doesn't change its spots, everyone. Phoenix is one of the most volatile housing markets in America. It's a place where all the investors pile in during the boom. It's a place where all the people from California, they move to Phoenix during the boom cycle. A lot of those people from California, they buy second homes, they buy Airbnbs, they buy investment properties. And then when the downturn hits, all these people at once, they leave in unison, which causes a big vacuum of demand in the housing market, a vacuum that we're starting to see right now. With data from Redfin showing that the number of homes sold in the Phoenix metro area is down 11% over the last year. But not only that, folks, it's down almost 40% from where it was in 2021. So the home sales are down by 40% due to this lack of buyer demand, while at the same time, the new listings in the market, they are starting to surge back up due to a fire sale that's happening from real estate investors. There's lots of people in Phoenix and Arizona more broadly have reached out to me over the last couple of weeks saying that the investors are starting to sell. Particularly the big corporate investors, they now see what's going on in the Phoenix housing market and they want to get out before the crash gets worse. Like the seller on this house in Phoenix, it's listed on the market for $350,000, but take a look at the history. This house was originally purchased in June 2022 for $395,000 by a big Wall Street investor, a private equity fund out of Texas. Well, what happened? They bought it for $395,000. They listed it for rent. They had to cut the rent a whole lot. Now, a year later, they're listing it for sale at $350,000, an 11% loss. And we're going to see more and more of this investor sell-off pop up in the Phoenix housing market as we head into 2024, because this is a place where the fundamentals are really bad for real estate investors right now, particularly the rents. The rents in Phoenix are going down. They've been going down over the last 18 months. So when the rents are going down, that means that real estate investors have to accept a lower return on their investment. Many of these investors are only getting a 4 to 5% cap rate or cash flow yield on their investment, which means that they actually might be better off just selling their property and buying a US government bond. And this is not me speculating. This is something that the big Wall Street real estate investors are coming out and saying. With the CFO of Invitation Homes, the largest homeowner in America, recently saying that it feels really good at the moment that we can sell assets, aka the houses that we own, at a 4% cap rate and put the cash in the bank and earn 5.4%. So we don't need to have an immediate sort of capital redeployment opportunity. We can basically park the cash and it is still accretive up until such a point that we find something that is interesting to go after on the acquisition side. And at the same time, Invitation Homes in this call pointed out Phoenix as a market where they're seeing softness on their rentals. They're seeing weaker demand in Phoenix. So reading the tea leaves, what these big Wall Street executives are saying is, yeah, we're going to probably sell in a market like Phoenix. We have some incentive to sell our assets there. And I think that's going to cause inventory on the Phoenix housing market to explode over the next several months, especially into 2024, everyone, because investors own just so many homes across the Phoenix market that even if a small percentage of them sell, that's just going to inundate the market with homes for sale, and the buyers aren't going to be there because the affordability isn't there. And some areas in Phoenix I have very high concern for are these areas in red. If we're looking at the zip code map of the Phoenix housing market, these areas in red are the most overvalued in terms of of their home prices. They're the ones where prices could plunge the most if this investor sell-off that I'm predicting in 2024 comes to fruition. We're talking about areas like Peoria and Glendale. Glendale, for instance, home prices are 63% overvalued right now. Typical home price of $316,000 in this zip code, a fair home value of $193,000. That's even bigger overvaluation at the peak of the last bubble. So this suggests downward price pressure is coming in Glendale. I also think we're going to see some issues out in Mesa. We can see in Mesa and in Chandler, we have some overvalued homes out here. Meanwhile, the least overvalued markets actually appear to be Scottsdale and Tempe, where home prices are expensive, but they're actually more fundamentally supported by the long-term home value to income ratio. And before getting more into my predictions for the Phoenix and Arizona housing market in this video, I want to clarify what I mean by this overvaluation rate, because I know a lot of you guys have questions like, how do you come up with saying that a city or metro or zip code is 30-40% overvalued? And folks, it's very simple. It's taking a look at the housing market over the last 20 years and assessing how do home prices compare to income levels, because ultimately it's income in the long run which dictates the level of home prices. And so if you see, for instance, in an area like Mesa, the home value to income ratio go up to 6.5 with a typical home value of $359,000 divided by a median income of $55,000, you can see this 6.5 value to income ratio. This is significantly higher than the long-term average of 4.4. So going back 20 years, the home value to income ratio in this zip code was 4.4. And you can basically see points in time where the value to income ratio is above the dotted line, the housing market's overvalued, and points in time where it's below the dotted line, the housing market is undervalued. And one thing that actually has me excited about Phoenix and Arizona in general is that I think there will eventually be some very good buying opportunities in this housing market, because this is what the Phoenix and Arizona housing market tends to do. It booms, gets really expensive, bad time to buy, and then it busts. And when it busts and all the investors sell and the people from California leave, then the prices tend to go down maybe below what they should be. And if you go back to the last crash, the kind of the end of the last crash by 2012 in Phoenix especially, there were tremendous buying opportunities. I mean, folks, the people who bought in 2012 in Phoenix in that last crash, I mean, they made a killing. Take a look at this, everyone. So if we go back to the zip code map here of Phoenix and change the data point to home value, and let's just go out to like Peoria, for instance, you can see that in that last downturn, the typical home price in the zip code in Peoria went down to $78,000. I mean, the price went down by almost 60%, 65%. It went to $78,000. And so if you had bought a house for $78,000 in this zip code in Peoria in the last downturn, you could have immediately rented it out and gotten a 16% return. Today, if you were to buy the same house and rent it out, you would get a 5.4% return. So you can see we're not even close to it really being a compelling buying opportunity for people or investors in this market today. If we scroll around and look at another zip code like out here in Tolleson, you can see same thing. The cap rate went up to 17%. So you could have bought a house for 90 grand in this zip code back in the bottom of the last crash and immediately gotten $15,000 a year in net rental income. I mean, that's a good deal when the yields and cap rates are that high, but now the yields and cap rates are very low as the Fed keeps increasing interest rates. This isn't a good deal, but eventually what we'll see, prices go down enough, the cap rates will go back up, signaling that for investors that's a good time to buy, and additionally for home buyers it'll signal it's a good time to buy. But of course, there are differences that exist across the Arizona housing market, everyone. So far in this video I've been talking mainly about Phoenix, but we also got metros like Tucson, Flagstaff, Lake Havasu City. Let's take a look at some of these other areas in Phoenix and see potentially, how overvalued home prices might be. So if we head back to Reventure app, change it to metro area, and then click overvalued percentage, we can see that actually Phoenix is not as overvalued as some of these northern, more vacation style areas like Flagstaff and Show Low, which are 40 to 45% overvalued. These are huge Airbnb markets, especially, and I think there's a big Airbnb bubble in these areas right now. So in Flagstaff, we can see prices are 48% overvalued, typical home value of $605,000, fair home value of $408,000 based off the underlying income levels in the market. We've never seen this level of overvaluation in Flagstaff before. And at the same time, if we click on a metric here called shadow inventory, we can see 25% of all the owned houses in Flagstaff are vacant on a seasonal basis. 32% in Show Low are vacant. So you have to ask yourself, what happens to a tremendously overvalued housing market that has lots of vacant homes when the recession and the Airbnb crash hits? I mean, I think it's going to be devastating potentially in some of these vacation destinations in northern Arizona. And I'm already hearing lots of reports about big declines in Airbnb revenue and short-term rental revenue in those locations. I had a short-term short-term rental property manager in that area emailed me a couple months ago and saying that their rates are down about 20%, 30%. Their occupancies are down a bit. If you look at data from Key Data, a short-term rental data provider, they're saying that short-term rental revenue is down 24% in the Southwest US, which is obviously covering this area in Arizona. So more broadly in the Southwest, there's a 24% decline in short-term rental revenue. I would bet it's even bigger if you were to isolate the Flagstaff, Prescott, Show Low area. However, one thing we will need to see to unlock these price declines is we're going to need to see more inventory hit the market for sale, because we still have somewhat of a shortage of homes for sale in Arizona. I wouldn't call it like a crazy shortage. The inventory has gone up significantly from the bottom of the pandemic. We're definitely going to need to see more people list their homes, more investors list their homes over the next 6 months to begin to see some of the cascading price declines that are necessary to bring affordability back into the market. And where you can see today, Arizona as a state has 15,000 homes in active inventory, according to data from Realtor.com, which you can find on Reventure app. Now, we can see that this inventory is actually down from where it was last year. So a lot of you guys tracking the market, you probably know in Arizona, we had kind of a mini crash at the end of last year in 2022. And then we had the situation where no one wanted to list their homes for about a year, which caused inventory to go back down, even though buyer demand was also back down. But now we're starting to see month by month inventory get back into positive territory. And I wouldn't be surprised if by, let's just say, 4 to 6 months from now, we see inventory levels in Arizona, which are similar to what they were at the end of 2022, with lots of homes on the market and lots of price cuts. And the days on the market, especially, getting really long. Like sellers listing their homes, maybe they list too high and they just don't get any buyers. Like their open houses are empty and their house is sitting for 4 months. And it's ultimately that kind of lingering of the house on the market. That's what really wakes sellers up to cut the price. Because I know I get a lot of questions from you guys out there like, Nick, the data you show makes sense, but how come sellers are still listing at such a high price when mortgage rates are 8%? And the reason is because, sellers are stubborn, everyone. If a seller thinks or saw at one point that their house was worth X, they're going to try to get that. Like they're going to think that's what it is. Even if the realtor tells them, no, you got to list more reasonably, they're going to list high often. And it's going to take their house sitting on the market for an extended period of time for them to wake up and get with reality. And we can see actually that the days on the market in Arizona is at 44 days, which is now right around the long-term average. It's down a little bit from where it was last year, but you can see well up from where it was in the pandemic. So the days on the market is about average, but I think this days on the market in future months and quarters is going to keep trending upward, probably above 50 days. Maybe eventually it gets to 60 days on the market if this investor sell-off really builds up steam. Now, an important thing to understand and think about with Arizona and Phoenix, especially if you're a home buyer and investor, is what's the long-term trajectory of home prices? Because we have kind of a difference here between the short run and the long run in Arizona. Because in the short run, I'm very bearish. I see the data saying home prices are way overvalued. I see the rents going down. I see the investors starting to sell. So I say to myself, in the short run, which I'm going to call 1 to 3 years, I see quite a bit of pain coming from Arizona. But in the long run, this still will probably be a decent place to buy a house because the growth levels are still very, very strong overall in terms of people and population moving in. There's lots of people moving into Arizona. It's not just, a narrative that people spit out. When you look at the data from the US Census Bureau, you see that 93,000 net people moved into Arizona in 2022, whereas 217,000 left California. And of course, we know a lot of these people left California, they came to Arizona. And that 93,000 net migration, it was pretty good. I would say it's actually kind of normal for Arizona. If you go back 30 years, it's typically hovering around this like 60 to 100,000 net migration level. So pretty normal level, positive migration, strong migration into Arizona. We're actually below what we were at in 0506. You can see the peak in migration was 0506 in Arizona. But what I do want to point you guys to is kind of a cyclical nature. You can kind of see this cyclical nature here to the migration where we have these peaks, like we had a peak in 1995 in migration, and then the migration kind of just dropped off for the next 6 years or so. Then we had a peak in migration in 06, and then we had a big drop off that lasted about 10 years. Then we had like another what I call mini peak in migration in 2020 that is now now dropping off. So I wouldn't be surprised if the migration continues to drop off in future years down maybe to 40,000, which is still positive, but less than it was. And looking at this migration in more detail, you can see that Phoenix obviously attracts most of the migration. 64,000 net people moved into Phoenix in 2022. Tucson, though, does get some positive migration. It had around 11,000. And you can see Tucson has a bit more of a stable migration level, probably due to the fact that its economy is more stable. Tucson is a city and a metro that runs basically off Arizona State University and the fact that there's some big defense contractors there like Raytheon. So it's a more stable employment base that doesn't have as much of a boom or bust component. However, home prices in Tucson do have a boom or bust component historically. As you can see, if we look at home value data going back to 2000, we had a big run up in values in Tucson in 06. They peaked at 238,000 and then they crashed all the way down to 139,000. So about, what is that, 35%, 40% decline. Wasn't as bad as the crash in Phoenix, but then of course prices in Tucson incrementally grew and then surged again over the last couple years. And today I have Tucson pegged at about 21% overvalued. Typical home price of 341,000 compared to a fair home value of 280,000. Again, folks, the way that I get to that overvalued percentage is I look at the relationship of home values to income, which today is 5.1 in Tucson, which is higher than that long-term average of 4.3. So we're going to need to see some combination of prices down and incomes up to bring affordability back into the market. And that's the other thing to understand about overvaluation, whether it's in Phoenix, whether it's in Tucson, Arizona, or anywhere else in America, is that there's two ways that it can be solved. The simplest and quickest way for overvaluation to be solved is for prices to come down. But another way for overvaluation to be solved is for incomes to go up. So if incomes were to go up a lot in Arizona over the next couple years, then theoretically those growing incomes could reintroduce affordability into the market without seeing home prices have to crash by the same amount. However, I'm skeptical that we're going to see strong income growth going forward in Arizona because more broadly, the macroeconomic environment's a tough one right now with interest rates and mortgage rates super high, home buyer demand's way low. We're going to see the builders, I think, in Arizona begin to lay off a lot of people soon due to a lack of demand for building. And so we're going to see some economic issues in Arizona in the short term over the next couple of years, which I think could suppress wage growth, cause some job losses, cause the unemployment rate to go up. And so I think we could see a little bit of income and wage growth in Arizona, but I'm not banking on that to save the housing market, especially looking kind of at the history of the economy in this area. Because if we take a look at the unemployment rate in Phoenix going back all the way to 1990, I mean, what do we see, folks? We definitely have some volatility here, right? Like we have these situations like in 1998 where the unemployment rate in Phoenix went down to 2.5%, but then where was it? By 2002 it was up to 6%, right? The unemployment rate more than doubled, then the unemployment rate went down to 3% in 07, and then it more than tripled 10% in that last downturn. And again, we kind of see the unemployment rate in Phoenix had bottomed at 3% earlier this year, is now up to 3.5%. So don't be surprised if this unemployment rate in Phoenix goes up at least probably to 6%, maybe 7% in a recession, which would cause even more forced selling, would cause more pandemonium in the housing market. And so what's my 2024 housing market forecast for Arizona? Well, I see prices going down in 2024, and I think they could go down by a lot, especially if that economic recession really starts to hit. This is a state and a housing market that is hugely exposed to price declines. It's super volatile historically. It's overvalued. There's lots of investors now that are looking to sell out of the market. I mean, this is a cocktail that could produce prices going down very, very fast. But really, if you want to make the most informed decision about when and where you should buy a house in Arizona, you got to pay special attention to the data in your city and neighborhood. Because if you're in one of these areas in red that's super overvalued with lots of sellers currently cutting the price, which is another data point you can look at on Reventure app, price cut percentage, with a lot of potential shadow inventory lurking in the background, that could be the type of area that goes down by a lot. Conversely, cities and zip codes which aren't as overvalued, that don't have as much shadow inventory, and where price cuts are lower, they're likely a bit more stable and unlikely to see price declines as big. And what's great is that you guys can actually check out all this data for yourself on Reventure app. Go to www.reventure.app. You can see that we just relaunched this website with a new design. Go to the search bar and type in the city you're looking at. Maybe you're looking in Phoenix, and then you can start immediately exploring all of this data in your city, in your neighborhood and zip code for free. Actually, you can look at data on home value and home value growth, for sale inventory and inventory growth, population and median household income, as well as rental rates. You can look at all of that data under a free plan on Reventure app. And if you decide that you want even more in-depth metrics like overvaluation percentage, value to income ratio, or cap rate, all you need to do is just click on one of them and you'll get a prompt to sign up. The monthly pass for all of the data on Reventure app. For every city, state, and zip code in America, it's $39 a month. Alternatively, you can do an annual pass for a 15% discount at $399 a year. That's a pretty reasonable price for securing peace of mind about your home buying or real estate investment decision-making process. So once again, go to www.reventure.app to access this data for yourself so you can make a better and more informed decision.